What's going on, guys? Welcome back to the channel. It's good to see you all again. I think this might be some of my best work yet, so I hope you stick around. What I wanted to talk about, and I'm not giving any financial advice here, so I'm not even going to give you a disclaimer. I wanted to talk about some of the fail to delivers, the cost to borrow, the days on loan average, what we're looking at. I did a little bit of math, I broke it down. So if you don't mind, hit the like button and I will get right into the information. It might be just a little bit longer because I want to explain this in a way that makes sense and is clear to everybody, and we got some statistics to back some things up. So I want to go through it with you. And that's exactly what I'm going to do. So you will see that I have Ortex pulled up here. Some of you like it, some of you don't. It's the best that we have to work with. So what I did was I looked back basically at the cost to borrow average on May 30th. And there you can see it at 553%. So from there, I was able to do just a little bit of math. So since May 31st, Redbox, they've had 100% exchange reported short interest of the free float. So since May 31st, that's why I used the cost to borrow average from May 30th. That was 553%. Now the average days on loan are 35 days. So what I did was I looked back to see what was the price of Redbox around May 30th. It was approximately $7.50. We're going to round that just for easy math. It's close enough that it makes sense and the numbers will be able to work for what we're looking at. So I always like to be a little bit more conservative. That $7.50 is a little bit more conservative. And we knew that the cost to borrow average was 553%. So I just bumped that down to 500% just for giggles, right? $7.50 times 500% equals $37.50. Now that would be what the cost of one share would be if they were to hold that share for 365 trading days. So from there we have to take that number and we have to divide it by 365 calendar days. I don't know if they go with calendar days or trading days, but calendar days again are going to be more, so let's be on the conservative side. 3750 divided by 365 days equals 10 cents a day is what they're paying in interest, technically, going through all of these numbers. So about a dime. Now, the average days on loan, right, were 35 days. So if we're thinking 10 cents a day, 35 days on loan, that's already $3.50 that they paid in holding costs to hold on to those shares, to hold on to that short position that they took out. Now, just because they borrowed them 35 days ago on average doesn't mean that they entered them into the market immediately when they borrowed them. They just have the right to be able to use those shares to take them short whenever they want to. So let's just say they anticipated that Redbox was going to have a little bit of a run up. So they were waiting for the right moment to use it. Now I'm giving them some pretty good credit, but we traded in that $15 to $18 range long enough that they could have said, okay, this might be where we want to use our short position, where we want to enter into it. So they went ahead and they took advantage of that area. And we're just going to estimate right in the middle of $15 and $18 equals $16.50. So let's say every single short hit it at $16.50. We know they can't do that, but we got to have numbers. So take a nice average between the two. At that $16.50 average, they've already lost $3.50 because they've been holding it for 35 days to be able to enter that into the market. So they've already paid that interest, just waiting, just holding them, sitting here like you guys are, right? You're holding onto your shares, they're holding onto their shorts. So from there, $13 was basically being the profitable range from shorts. So if they took it short at $16.50, they already lost $3.50. They needed that to get down to $13 before they even were seeing their position to be profitable. Now every 10 days that goes by, that profit line drops by $1. Why $1? Because 10 cents times 10 days is $1. So say 10 days from now, that $13 profit line drops down to $12. So are they going to cover them or not? Are they going to just play their hand, and are they going to see if they can squeeze a little bit more out of this, or are they going to cover? We don't know yet. We're waiting to find out. But what I also think is I think they probably swap them out. Why do I think that? Because we saw it drop pretty good for several trading days, and then we got a little bit of a flat line. We got a little bit of relief in the charts. You can see it if you look back. Several days of drop, and then just a brief sideways, and I think there was even a minor green day in there. So right there, the shorts could have slowly been swapping them out, right? Taking some of their profit around that $9 range, be able to cover some of them and just re-short back into the market. So they're swapping them out. They're taking that profit that they had from there. So if they did swap them out at 9, that would have technically given them $7.50. So from $16.50 average that we're working with, minus the $3.50 holding costs that they had from the cost to borrow, that would put them at a $4.50 profit as of right now, technically. So from that $9, they're say up $4.50, plus we're $3 lower in where we're trading right now, because it's sitting right at, call it $6 again. So that equates to about $7.50 per share profitability where they are. Now every day that goes by, remember, is 10 cents. So every 10 days is going to be $1 hit that they're going to be taking. So every dollar that it increases from here, from the $6 range, is also going to be taking a hit out of their profitability. So as time goes by and as the price increases, it's like a double-edged sword. It's coming for them. What we don't want to see, though, is it to go lower, because that's just increasing the time that they can be involved in the play, how long they can hold it. Every dollar that it goes lower from $6 gives them an additional 10 days that they could be in the play technically for free. So we need to see what happens from here. I will get into a little bit of TA. I'm probably going to do that in a separate video because I know this one was a little bit longer, but I did want to touch quickly on the FTDs as well. We have 2.3 million FTDs right now that are currently reported. I think we're going to get an update on that come Tuesday to see what's really going on. But honestly, where are they going to get the shares from? I think as far as the gamma squeeze that we were hoping that happened at 1201, I don't think it ever happened. And I mean, you're like, yeah, obviously it never happened, but it couldn't happen. They don't have anywhere to get their shares from. We had 21,000 calls in the money, right? That was 2.1 million shares that should have been delivered that day. And we have 2.3 million that have failed to deliver. So none of that ever even impacted anything in the play. It's just been hammered down from there, and it's all just collectively sitting there waiting to be able to, I think, collide all together. I think once the shorts start returning their shares, actually returning them, then some of those failed to delivers can actually be satisfied. But right now, you guys are just, you're hanging on. You know, you're still coming back watching the videos, so I know that you're sitting there gripping your shares tight. They're not getting them from you. They have nowhere to get them. There is really no liquidity. I don't know where the liquidity is coming from, but they have two different problems. The shorts are not returning their shares, so the market can't get their shares that they need to deliver on the fail to delivers. And we know that can linger for a little while. We've seen it in plays before. I want to say GameStop, I think it took almost 2 months that they were on the threshold list before they actually saw that pop, before they actually saw that all that action come back into the play. So I do also think I like the situation that CSSE is in along with Redbox. They're both considerably short. They're both high up on the short squeeze list. And I think that maybe, if you needed a partner and to be in this situation with, at least the partner that wants to take you over in a merge is in a similar situation. And we know that the insiders could have some sort of benefits that would come from a short squeeze, and that CSSE has actually delayed the merge as far as we know. As of right now, they filed for a short extension. So could they be helping Redbox to delay this so that a lot of those insiders could actually be a little bit more profitable in the short term? It could happen, right? Stranger things have happened. It's just a tinfoil hat theory, but sometimes we have to have a theory because we don't really know what's going on. We're kind of in the dark. We see the manipulation. We see what's happening. We see it in the charts. We see it in the reports, but nothing's really ever come of it. Nothing's done. It all takes time. All of this takes time to work itself out, and which way is it going to go? So maybe they're buying us the time that we need in the play to be able to actually see what unfolds with a short squeeze. As I said, as time goes on, I see this becoming more and more of a short squeeze play and less of a momentum trade. So I'm curious as to how this is going to go. Let's keep an eye on the numbers. I will be back with a couple of areas that I think are going to be good support, and I'll probably be considering an entry point back in around one of those two numbers that I have picked out. I just want to see how it goes from here. So I'm excited for Tuesday, not necessarily because I think anything major is going to happen, but I do think that they have us to a position where it could go slightly lower, but I think the odds and the advantage is to go higher from here. So thank you guys so much for coming back again. It's always enjoyable to have you guys back here. If you don't mind, drop a like again. If you would, leave a comment if you wish, and always subscribe to the channel so that you don't miss any of the updates. I think this could have been my best piece of work yet. I think it's relatively accurate as far as numbers go because I went back and I sourced everything and I used everything. I did one of these a while ago and it was a hypothetical. This one's not so much hypothetical. This one's based off of data that we have, mathematics that we can use, and timetables that hopefully we can work with. So let's see what happens, guys. Enjoy the long weekend. As always, stay golden and may your accounts stay green.